The markets are extremely volatile in the last couple of days. We can open up deep red, finish flat. We can open up deep green and finish red, which is exactly what has happened yesterday. Remember yesterday's video and even yesterday's live stream. All of the stocks were green. Well, we ended the day red. Today, futures were red, yet we are opening up greenish or green for quite a lot of the tech companies. So just an FYI, just because we're opening up red or green does not mean that we're going to finish red or green as we've seen in the last couple of days. Now in today's video, I do want to touch on a couple of names that have been impacted quite a lot, or the stocks have been impacted quite a lot, yet their businesses should not really face, well, such severe impacts from the whole tariff story. Indirectly, of course, every company can get impacted, right? If consumer spending comes down, if we are going into a recession, or if we are in a recession already right now, then yes, these businesses can get impacted. But maybe right now there is an overreaction, especially with those names and maybe some other names as well. If you've been picking up some solid companies, let me know which one down in the comment section below. We're going to look at some macro data, and then I do want to touch on some news related for AMD, Google Alphabet, and Shopify as well. So stay tuned for all of that. If you enjoy this type of videos, hit all the buttons, would really appreciate it. And if you're new here, hit that red one, the subscribe button. We're trying to reach 90,000 subscribers, so thank you very much. And thank you to all the new members of the channel. I do really appreciate the support. If you want to support me even further, do check out the links down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So right now, at the time of making this video, you can see that Nvidia is up 3%, Apple up 3%, Tesla 3.8%. So tech names are up today. Financial stocks are down, health stocks are down. That's because I believe there was an announcement that pharmaceuticals will get hit with tariffs pretty soon. So now this sector is getting hit. Usually what we have seen in the last couple of days and maybe even weeks is that, well, technology sector, tech sector has been hit, and then you have financial names, and especially health technology or consumer, those sectors have been green. Well, today we have the exact opposite. Again, this is just right now. Throughout the day, a lot of things can be said, a lot of moves can be made as well. Looking at this chart right here, S&P 500, the sentiment, well, if we look at the bullish sentiment right here, 23.6%, the lowest it has been since, well, the end of 2008, the great financial crisis that is. So yeah, sentiment is definitely been thrown out of the bullish sentiment is thrown out of the window. Now another thing here, and I found this very interesting, investors lose $25 billion in leverage ETFs in sector's biggest meltdown. Risky funds drop almost a quarter of their value as Trump's trade war hits market. These are the ETFs where, well, you're getting 2x, 3x, sometimes even 5x exposure. As we've said plenty of times on this channel and during the live streams, these things are extremely risky. Of course, if you have lost money and then you're saying, oh, but if I use this ETF, right? If I use this leverage ETF, if we go up, I can make up my losses much quicker, right? I can make it back much quicker. Yes, but you can also lose much quicker. So yeah, I highly suggest you do not touch these things. But then again, it's your money, you do whatever you want. Moving on to company number one, and I do want to say thank you to Tanner for showing us this. So this is SoFi's website traffic for the last 3 months, and then here you can see each and every quarter. Well, it seems like Q1 was a record quarter for website traffic. So yeah, when they told us last earnings call that in 2025 they're going back into growth mode, well, these are maybe the first little hints that, well, this is actually happening. Now, of course, website traffic is one thing, conversion is another, right? Cost of acquisition is another thing, and that's something we will track, of course, in the upcoming earnings reports. But this is definitely good data to get. Now, yes, SoFi is definitely one of those names that I'm extremely bullish on, and to be honest, they're not going to be affected by tariffs. They might be affected, well, indirectly, right? If we go into a recession. If we go into a recession, if unemployment rates do rise to above 5% and all of that, then yes, a company like SoFi will get affected. This is something that management has been telling us for quite a long time, right? Their own guidance is taking all of those bearish points into consideration. Now, as of today, we're still far away from the negative assumptions that they've been making. And so right now, seeing that SoFi is getting hit hard, to me, it is, well, it's a no-brainer. So in the last month, SoFi stock is down 12.6%. And actually in the last 5 days, it's up 2.1%. So there is a little bit of strength to be found in this stock. I mean, we are back under $10 the last 5 days. Okay, it's held up better than the others, probably because, well, the tariff impact does not impact a company like SoFi that much, unless there is a greater negative economic impact in the United States, then yes. But to me, SoFi, great management, good track record, even when times were tough. We've talked about that in the past, right? Revenue continues to go up. Doesn't matter whether it's a bearish year or a bullish year, SoFi continues to execute quite well. So if I had to make a list of the, well, like analysts do it, right? The best idea of the year. Well, it's not a new idea, but SoFi under $10 to me is a no-brainer. Of course, you can disagree with that, and that's completely fine. We've also had some news coming out from Galileo. So Galileo deposit sweep product amplifies customer interest earnings and extends FDIC coverage. So this will enable fintechs to partner with a network of participating banks and a deposit sweep provider. This allows customers to maximize interest earnings on their deposits. It also helps customers extend FDIC insurance coverage by spreading funds across multiple banks. Galileo facilitates data exchange and reporting for fintechs using the product. The system will automate funds transfer above a defined threshold. This also aims to optimize customer returns while maintaining liquidity. It provides fintechs with an automated way to deliver added value and peace of mind, which is something that, well, was it Synapse? Yeah, I think Synapse is the perfect example of what should not have happened. And here again, Galileo, owned by SoFi, is solving an issue. So fintechs can directly partner with a leading deposit solution provider and choose banks based on various criteria. So slowly but surely, we're getting more and more moves, more and more news when it comes to the tech platform. Moving on to company number 2, one of my favorite names that I own in the core portfolio, and that's Mercado Libre. Mercado Libre mainly operates in Latin America, and as you can see here, the region's leading e-commerce platform. Number 1 in Mexico, number 1 in Colombia, number 1 in Brazil, Uruguay, Argentina, and Chile. 26% GMV compound annual growth since 2016. This is an amazing company with incredible leadership. Now, of course, Mercado Libre, yes, did get hit a little bit. I'm going to show you in just a bit, but this is not an American company, right? This is not an American company. This is a company purely based in Latin America. Now, here as well, they can get hit, right? Indirect impact from the whole tariff war. If economic situations around those countries right here get worse, then yes, it will impact a business like Mercado Libre. Now, on the flip side, remember last quarter, Mercado Libre, new holdings, they got hit because the US dollar was quite strong for a long time. So those were FX headwinds. Now those FX headwinds will turn into FX tailwinds as the US dollar weakens, and that should help a company like Mercado Libre. Now with Mercado Libre, of course, you have a two-sided network. Let's say there's Mercado Libre, the e-commerce side of things, logistics side of things, advertising, and then you've got Mercado Pago. So they show us here in this slide, Latin America's e-commerce market is far from mature, and its financial services market is ripe for disruption, which is why Mercado Pago has been growing so fast, which is why New Holdings has been such a big success. Now you're going to ask me, why is New Holdings not on this list? Well, it can definitely be on this list as well. But me personally, of course, I own Mercado Libre. So yes, I am biased, but would you rather me talk about stocks that I don't own or stock that I do own? Although the next stock is going to be a stock that I used to own, I don't own anymore. But anyways, Mercado Libre, I think, is still going to be a huge winner. I mean, these are the fourth quarter results. Incredible growth, incredible execution by this company, right? Latin America is a very interesting market. Economies there are growing actually quite fast, or should I say expected to grow also quite fast in the future. And these are basically the results from last quarter. And yeah, I mean, this will just become better and better, bigger and bigger. This is not the cheapest name out there. No, not at all. Currently, it has a PE, trailing PE of 47.6 times and a forward PE of 38.1. But if you look at the expected growth rate for revenue next 2 years, 23.7%, EPS 31.2%. So it's still expected to grow quite rapidly in the future. It has a market cap of $92.5 billion. So also not the smallest company out there, but I do believe that they can become bigger and bigger. Year to date, this is a company that's, well, a stock that's actually still up. It's up 4.1%. In the last 3 months, same thing. Well, makes sense. In the last month, it is down a little bit, but not by much. So Mercado Libre, you have a great company, good location in my opinion as well, especially now when we're talking about all of the tariff shenanigans, plus incredible world-class leadership. Moving on to company number 3. Yes, we've talked about SoFi. Now we have to talk about Robinhood here as well. Robinhood is back at $35, market cap $30 billion. Year to date, the stock is down 10%. And in the last month, well, let's call it flat-ish. And in the last 5 days, it's actually up 2.6. So a bit like SoFi. Now here, if you look at the trailing 12 months PE, 22.7 times. Next 12 months is currently at 27.9 times because, well, currently the expectations are that they're maybe not going to grow as fast as before. Now, of course, volatility is their friend as long as people transact more and more on their platform, whether it's crypto or equities, options, you name it. Volatility should be the friend of Robinhood. Now, what we've seen in the past is that during bear markets, well, volumes come down. And I think the March numbers actually show that volume did come down from February and January, I believe, but they have been diversifying, right? They have been diversifying their business, that it's not just going to be a platform that only does well during bullish years. Now, of course, as we've discussed, last quarter was an incredible quarter, right? Especially because of crypto. Crypto was $358 million. But if you look at the quarters before that, this is an outlier. Now, I'm not saying that we're going back to 61 or $43 million. No. But seeing these results again, I don't think we're going to see those in the next quarter. Now, what we are seeing here is, of course, net interest revenue continues to go up. So it still is quite a good environment for them, all things considered. Total assets under custody is continuing to go up and up and up, despite monthly active users still being far away from the peak here in 2021. But that doesn't really matter much because look at the average revenue per user. Since the bottom here, 53, that was back in March 2022, it has tripled. Well, actually a bit more than tripled. And guess what? Monthly active users are still down from that point. So monthly active users we have less monthly active users today, yet the average revenue per user is 3 times more than before. And this to me shows you that, well, their business is definitely growing and diversifying. Now, of course, right now it mainly comes from the United States, a little bit from the UK. Now, yesterday someone posted on X that Robinhood got a European Union brokerage license from the Central Bank of Lithuania. So I guess Robinhood brokerage is coming to Europe. You might say, oh, it's Lithuania. That's quite strange. Well, Revolut did the exact same thing. So yeah, they're expanding quite rapidly. I believe they're also going to open up in some Asian markets as well. So Robinhood, $35, although I'm not a holder anymore. And yes, some people say it's Robinhood versus SoFi. Let's be honest here. No, Robinhood, I think, is still a very, very good company. And yeah, whether you want to admit it or not, a lot of retail investors like the volatility, like the casino-like financial markets, and well, they're all going to head towards Robinhood, I assume. Moving on to the last company, really quickly touching on this one because to me, this is again a no-brainer. Tariff-wise, I really don't see why this stock should have been hit that much. But then again, you might say, okay, recession, consumer spending coming down, economic slowdown as well, maybe less advertisers will spend on their platform. Okay, fair enough. But then when you think about it, if the advertisers are getting a better ROI on Meta today, better than ever before, why would they stop, right? If the return on investment makes sense for them, why would they stop advertising even if there is an economic slowdown? You understand what I'm saying? If the return on investment still stays the same or is still good enough for them, they'll continue to spend, right? Just because we have consumer spending coming down or an economic slowdown, first of all, you don't know how long this thing is going to last. Second of all, that doesn't mean that people are suddenly going to stop spending. No, they will just be spending less. So, and I do still think that, well, the billions of people are still going to be using the Meta services. So Meta, yes, still has to be on the list here. Company that is quite big, $1.29 trillion, but trailing 12 months PE 21.6, forward PE 20.5. I mean, this is again one of those no-brainers in my opinion. I did buy more a bit last week. As you know, I covered that in last week's video. So yeah, Meta still an amazing company. And I do think that they do not get a lot of respect, to be honest. Everybody's talking about the Max 7, so we're always automatically thinking about an Nvidia, a Microsoft, maybe even, well, an Apple, now that Apple is down a little bit. But Meta, for some reason, doesn't get enough attention. Moving on to some announcements, AMD announces Advancing AI 2025. The company will showcase its vision for AI and the hardware software partners and customers that will advance it. This will be an in-person event and live stream event on June 12th. The industry event will showcase the company's bold vision for AI, announce the next generation of AMD Instinct GPUs, AMD ROCm open software ecosystem progress, and reveal details on AI solutions for hyperscalers, enterprises, developers, startups, and more. Funny enough, we did talk about this with Jose during the live streams, whether or not AMD is going to have, I wouldn't say the equivalent of a GTC event, but a big event to actually show off what they've been working on. And I guess this is it. So June 12th, big event for AMD. Then moving on to Shopify. So Shopify CEO says staffers need to prove jobs can't be done by AI before asking for more headcount. Shopify CEO told employees in a memo that they'll have to show jobs can't be done by AI before asking for more headcount and resources. He said there's a fundamental expectation that employees are using AI in their day-to-day work. Tech companies have poured money into developing AI at the same time that they continue to cut jobs. And unfortunately, this is going to be, well, the results, right? Everybody's been saying, of course, you're not going to scare the public, right? Everybody's been saying, oh, AI will create a lot of jobs. AI will help the employees be more productive, which is true, and which is exactly what Toby here wants employees at Shopify to do. Use AI in your day-to-day workflows to make yourself more productive, more creative, and actually accelerate your work. But unfortunately, it says this here, right? He's not going to hire more humans unless you can prove that AI can't do that job better or faster than a human. And I think we're going to see this more and more. I've talked about it with Jose, a prediction that I made. I think we're going to have a quota in the future, humans to robots in a company. Moving on to the last announcement, also AI related, of course, Google will let companies run its Gemini AI models in their own data centers. Google's cloud group will let companies run its Gemini AI models in their own data centers starting in the third quarter. Of course, Anthropic and OpenAI have yet to open up their models to run in physical data centers. Now, Google's cloud chief said in a conference call after the Wiz announcement the following: "Our commitment to multi-cloud along with our investments in infrastructure and in AI are some of the reasons we are seeing tremendous movement with customers." And of course, this move right here will probably reinforce and will actually accelerate the adoption of Gemini AI models. Because right now, most of the players, right, the Googles, the Azure, the Amazon have their own data centers and the AI is running there. So you have to run all your data through their data centers. And now this move basically allows maybe government, maybe schools, other companies that maybe have their own data centers to run Gemini models, well, let's call it locally. And yes, here with the Wiz acquisition, which will only close if it passes regulatory approval in 2026, remember, they're committed to multi-cloud because remember, Wiz is working with Google and also its competitors. And so all in all, that's about it. Luckily, at the end of this video, the market or certain stocks here are still green. But again, maybe when you're watching this, things might change. So please, I'm just the messenger here. Anyways, that's all I've got for you right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.